My name is Beverly Babb. I'm the Executive Director of the National Association of Exclusive Buyer Agents, and I'm joined today by two of the members of our association who are brokers within our organization. And they are here today to share with you the ins and outs of home buying and to provide a foundation from which you can then launch to ask additional questions and really understand the home buying process from people who are truly 100% on your side, exclusive buyer agents. With that, I'll turn it over to Victoria.
Well, hello, everyone. Thank you so much for joining us. We're really excited to be able to offer this class to you. And Mike and I are going to be available to answer any questions that you have after the class. Our phone numbers will be made available to you. I am a real estate broker in Washington, D.C. I also serve the Maryland and Virginia areas, the greater Washington, D.C. area. I own Home Buyer Brokerage. And I am the host of the NAEBA podcast, Listen Up Homebuyers. We encourage you to go to our website and check out the podcast because all the guests really have a lot of good information, and it's all about things that you want to know about buying a home, from lenders to electricians to just home inspectors. All this information is available to you for free on the website.
Thanks, Beck. Well, I'm Mike Crowley, and I'm on the other side of the country, the other Washington. So, she sits in Washington, D.C. I sit in the state of Washington. We are the opposite side of Seattle. So if you're not from this part of the country, that means I am 4 or 5 hours away to get to Seattle. But Spokane's not a small city. I should say it's a small city or a big town, but we've got about 500,000 people in our metropolitan area here. And I've been practicing real estate for a little over 30 years. And most of that in the last 26, 27 years, only representing buyers, and probably won't be doing it 26 more years, but I hope to do it for a while into the future. So we're here to answer any of your questions. So anything else, Vic?
I don't think so. I guess we can wait and start right at the top of the hour, or we could.
We are at the top of the hour.
Oh, okay. Okay. Well, I guess we can just move on. Yeah.
I'll jump on here. So go ahead.
Yeah, before we get here, I thought, Mike, you might be able to tell a little bit about the National Association of Exclusive Buyer Agents, just a brief overview.
Yeah, I can add a little bit more to what Beverly already said. So National Association of Exclusive Buyers Agents is a nonprofit that's been around for about 27, 28 years. And it's made up of members from around the country that are real estate brokers. They are licensed realtors that help people buy homes. They do not help people sell homes. They only represent buyers, so they're committed to that. And like I said, we don't have them everywhere. And if you're looking for a realtor and we don't have one, we'll do our best to find somebody else. But yeah, that's about that. Victoria, anything else?
No, I think you did a good job covering it. Thanks. Okay, we're going to jump right in. The very first thing we're going to talk about is pre-approval. So first of all, pre-approval is a process that you go through with the lender to just make sure that you can get the home buying process started. So why do you need pre-approval? You need to know that you are qualified to purchase the home, and you'll also want to know the price range. You may have already figured out what your price range could be, but you'll want to talk with the lender, get that pre-approval done so that you know you're fully qualified for to be able to buy a home in the price range that you're looking in. With who do you get a pre-approval? Well, pre-approval should be done, we recommend, with a good experienced local lender. Local lenders are going to understand the market that they work in. They're going to be able to interact with the local real estate agents who are on the other side of the transaction when needed. And it's very important in this process that you choose somebody who's going to be a part of your team and be accessible to you and to anyone who needs to give them a call. When do you need to be pre-approved? If you are starting the home buying buying process, you need to go through the pre-approval process. And how long does pre-approval last? Typically, it will last for about 3 months, and you'll may need to do some more paperwork with your lender after that point. But that's generally speaking how long you can expect the pre-approval to last. Mike, anything?
Yeah, no matter how many times your lender tells you this is the last thing I'll need from you, it will not be the last thing they need from you, especially if it's been a couple of months. They like everything as recently as your last pay stub all the way up till closing. So assuming you have a job, which is a good start. So, and not having pre-approval is kind of like going to the airport without your passport or your driver's license. You're not going to get very far without it. People, especially when there's multiple offers and they have 6 offers on it and 5 people have pre-approval letters sitting there and they says, trust me, my client's good to go. It doesn't work very well in real estate. So yeah, pre-approval is very important. Hasn't always been. You used to just get pre-qualified and you had a rough idea. You'd go online and you could guess how much you could buy a house for, but it doesn't work that way anymore. And we don't have as many transactions fail anymore, I think, because of lack of qualified buyers either.
Yeah.
So.
And I would like to answer Margaret's question. She says, does getting a pre-approval or renewing it affect my credit rating? Mike, you want to take a stab at that?
Sure. No, absolutely not. There's a standard within the lending industry that you could go and talk to 3 or 4 different lenders. They're all going to pull credit on you, and it comes back as basically just one credit check on your credit. So that's going to stay there. If a bank chooses to go run another pre-approval on you because it's been 3, 4, 5, or 6 months since you've done that, that's not going to affect your credit rating at all.
Mm-hmm.
So.
And Mike, I have another couple of questions. One is, should I first start with my local lender that handles all of my banking?
Go ahead, Victoria.
That's a really good question. I personally recommend going to a lender who specializes in mortgages, who isn't, your banker, who isn't dividing up their time. Typically, big banks will have their mortgage department. Very, very often, they're not right there local wherever you are. I know my bank, their mortgage department is in Dallas, Texas. So the answer to your question is yes, you can start with your local, bank. But I strongly recommend going with a lender who specializes in loan products so that you can really understand what's available to you. And also they're the ones who are going to be able to help you flush out some of the first-time homebuyer programs or other home buying programs. And we'll get into that a little bit later.
Okay. And one more follow-up question on that too. And Mike, did you want to have another comment?
Yeah, I'll add on to that. If your realtor has somebody they recommend, it's just an idea. But the difference is if they have a relationship with that lender, they know that lender is going to get the job done. And it has somebody that's going to be accountable if they don't. So if you go through your own local bank, which is nothing's wrong with that, and people say, well, all my money's there. It just seems simpler. They have all of my information. Well, actually, your bank doesn't have all of your information that you need to mortgage a property. They know how much money you have, and that's about it. But you can share that with anybody. So I like local banks. I like local lenders. When problems come up, I like to be able to solve them myself. But if you go off and use a lender that I have zero relationship with, it's really hard for me to solve the problems when they come up.
Yeah, that's a good point. Good point.
Go ahead,
Mike,
Bev.
I'm going to toss this question to you from Stephen. He says, could you clarify the difference between a pre-qualification and a pre-approval?
Sure. Yeah. Years ago, lenders would be happy to just take your name, ask you how much money you make, ask you what you think your credit score is, and he would just run the numbers for you. And he'd write you out a letter and says, this person, if the information they gave me is true, could purchase a home for a given purchase price. Now, a pre-approval, they have run your credit check. They have verified your deposits, how much money you have in the bank. They have verified your lender, and you're pretty much ready to go absent a change in your credit history. And we're going to talk about that down the road. But it's just more solid. It's not a guess that you can purchase a home. It's a promise from the lender that if what they have is true and nothing changes, you will be able to close on the transaction.
What's your impression about using an online bank like Rocket Mortgage in one of those?
Go ahead, Vic.
Well, again, I don't want to speak disparagingly ever of anybody. But again, the online lenders tend to be not as easy to get a hold of as your local lender. And keep in mind, when you are going to work with somebody who is a lender, you want that lender to, do you want to be able to pick up the phone, and you want them to work the same hours that your realtor's working. So we work nights, we work weekends. We don't want to call an 800 number and find out that we can't get a pre-approval letter until Monday. Or we also want to make sure that if the listing agent says, hey, I just want to find out a little bit more about your client, I'm going to call the lender. You want to make sure they have a direct line, a person that they can talk to. And sometimes they may even know that lender, and that gives them reassurance as well. So again, if you're, want to get off on the right foot, I would highly recommend going with the local lender.
Yeah. The other problem comes up is I think some of those online lenders provide phenomenal rates, and they can do a good job. And if you're a well-qualified person, you can use the lender next door, you can use a lender 3,000 miles away. Your real estate transaction will close. However, if problems do come up and they need to be resolved, they will probably be resolved quicker locally.
Yeah.
And if you don't go with the lender that your realtor recommends, and you don't have to, but when
Right.
it comes to closing and you have the moving truck outside the house, and the reason you can't close on the real estate transaction is because the lender hasn't gotten the appraisal back yet, your realtor can't do anything about that.
Mhm.
And so I always tell people, use a different lender, but if you have a problem closing at the end of the transaction, really hard to leverage a lender 2,000 miles away.
Yeah, that's
So
a
there
very
will just be delays that you will have no control over.
good point.
So what do lenders look for? Well, this is the fun part. They want to make sure you can pay back the loan. So when they ask if you have a job, don't be offensive. They're not trying to interrogate you about anything. They need to make sure that you have a job. They need you to be on that job for a certain period of time. It doesn't mean you can't change jobs. If you work in the landscaping business and you change companies and you go to another landscaping business, that's fantastic. They're going to look at that and say, wow, they're looking to improve their job, as long as it's not like a significant cut in pay or a significant cut in responsibilities. But if you take a job change that goes from something like, let's say you're a nurse and you decide you don't want to be a nurse and you want to be a waitress, well, they're going to look at that carefully and say, is this a step of getting away from the job market or not? You might be taking a cut in pay, and they might be watching that and saying, we're looking for something to be similar or a step up. The capital, they need to make sure that you have the money. When you go to write an offer on a house, you can't say, eventually I'll have enough for my down payment. Eventually I'll have enough for my closing costs. They want to know that you have it in the bank. And when you write the offer on the house, there's a possibility they might ask for evidence of funds that you have the down payment and the ability to close on the transaction. The lender is definitely going to ask for it, but the other realtor might also. Collateral, they're going to make sure that the property is worth what you're paying for it. That's the good news. They're going to give you an idea. Most importantly, they're telling the bank, if they had to take this back in the event that you failed to purchase or failed to make your mortgage payments, that they could sell it for the same price. And then your credit score and history. We're going to talk a little bit more about that, but your credit score is very important. If you're under 600, you've probably got work to do. If you're between 620 and 700, you're probably in okay shape. If you're over 700, you're in great shape. And those scores can change pretty quickly. So sometimes you might need to take advice from your lender how to do it. Your realtor might have suggestions, and there's lots of resources out there to improve your credit score.
Yeah.
And then, of course, cash to close. That kind of goes along with the capital that you have, making sure that you've got the money, not just to close, but if you say, I've got just enough money to close, but you don't have enough money for a home inspection or enough money for the appraisal, then you're still going to be short. So, but your lender will help you with that. Go ahead, Vic.
No, I was agreeing with you. I have nothing to add. You covered it well.
Okay.
I do have a question. Someone wants to know, can I buy a home with a low credit score?
Well, that's a really good question, and that is a conversation with a good lender. I think what you want to do, because we're going to get into that in the next slide, but there are different types of loans, and you may qualify for one of the loans that could be available to you. But the most important thing is to have that conversation with the lender who knows your finances, and they can say, okay, your score is low, but maybe we could go with this FHA loan, or, your score is low, we need to build up that credit score, and here's how we can do that. And they'll offer you some advice. So yeah, it's important to have those conversations with the right people.
Yep.
All right. Thank you.
Mm-hmm. And conventional FHA and VA loans, they are the three main types of loans that most people use to buy a home. The conventional loan is the most common. We could spend a lot of time on this, but we're just providing you with a brief overview. Excuse me. You can have varying down payment options with a conventional loan. It is, as I said, one of the more common loan packages that you can get. The FHA loan are insured by the federal government. A lot of times, if your credit score is a little bit lower, you might be able to use an FHA loan. There are other things about the FHA loan that your lender will discuss with you, the details of that. And then, of course, the VA loan is for veterans or active duty military. And these can be some fantastic loan products. But again, they are just for veterans or active duty military. And the most important thing about all of this is that you want to make sure, if you're a first-time home buyer, that you let everybody know in the transaction, and your lender can, and your agent actually can help you find good first-time home buyer programs. A lot of states have grant programs. So keep that line of communication going, and you're assembling this team, your lender, your realtor, and we are here to make sure, once you provide us with your information, to make sure that you have the most information you can that will apply to your situation.
Yeah.
Mike, you want to add anything?
Yeah, I'll piggyback on some of that. So your FHA loans are 3.5% down. That's your big opportunity to get into it. It's also usually a lower interest rate, but it comes with what's a mortgage insurance. Is that the PMI? Not the PMI, mortgage insurance premium, which
Right.
makes it a little bit more expensive in the long run. So oftentimes you'll see a lower interest rate for FHA, but the costs in the long run can be pretty high. And I don't think you're allowed to get rid of that mortgage insurance premium
You're not.
anymore. So
You're not. No.
ideally, and we don't live in an ideal world, unfortunately, but the more money you can put down, the stronger your offer will be. Eventually, the faster you'll pay for the house. Ideally, the better interest rate you may get, or at least you'll be able to get rid of that private mortgage insurance if you do a conventional loan. So but there is 32% of the people out there in a recent survey think that you need 20% down to buy a home. The
You
good
don't.
news is there are conventional loans that will be 3%. FHA loans is 3.5%, up to 10% would be something for a lower credit, in answer to your question. So if you had a credit score at like 590, the FHA will do a loan for you, but they're going to require more than the usual 3.5% down. So you're looking at about 10% down. You're still going to have that mortgage insurance, which I'm not a big fan of. It's just an evil that we have to deal with to try to get people into homes. And then conventional does not just the 3%, 5%, 10%. Once you get to 20%, which is great, you no longer have a mortgage insurance premium. So if you do a conventional loan, you do 10% down. Over time, you're going to both build equity in the house and you're going to pay down the principal. And there are ways to get rid of the mortgage insurance premium. So order of preference, conventional loans the most ideal.
Right.
FHA loans are a great opportunity for people with lower credit scores or lower down payments. And the VA loans are a terrific opportunity for veterans that come home. They're not a cheap loan either, but they don't have a mortgage insurance to them. And the idea is, and there's also some other allowances that they're allowed to do that can add some of their costs on top of their purchase price. So all are great opportunities. It just depends on what your scenario is.
Yeah. And Stephen has a really good question. I've heard FHA offers are difficult to get accepted in a competitive market. Is that true? I would say no. And I would say no because if you are working with a local lender who can pick up the phone and talk to the listing agent and, explain to them your situation, or prove to them that you are a good qualified buyer, then you don't have to worry about what loan product that you use. Again, if you can get a conventional loan, that would be great. But no, I would say, if FHA is what you've got, then make sure you're working with people who are real communicative, and I think that would be fine for you. We have another question from Andy.
Let me add one more thing on that,
Sure.
if I could. So
Sure.
there are some homes out there that may not go FHA. And we're talking about experienced realtors and realtors that are representing your needs. If you have an experienced realtor on your side and they walk you through a house and tell you our obstacle here is I don't know if this home will go FHA, the seller may choose not to take your offer because they're correct. The home may need painted. There may be small things. It used to be something as simple as a railing on a stair. There's things called earth to wood contact or a roof. If the roof doesn't look like it can last another 5 years, the FHA won't do it. So there are scenarios where if somebody has 5 offers and you're the FHA one and they don't want to paint their house or replace the roof or do other things for it, you're at a disadvantage. You can fix those things. One is you can always switch to conventional, but that's not the point. You can offer to, you might end up doing a higher offer and asking them to replace the roof as part of the offer. My first home was FHA. They did not want to go FHA. We offered to paint the house. Now, granted, it was only a 650 square foot home, but they weren't going to take an FHA offer because they knew the house needed painted. So we took that off the table. So if your realtor is experienced, I don't want you to get into the scenario where, one, you're not getting the offers because the house won't go FHA, or B, that the realtor doesn't know it's not going to go FHA, and you end up spending the money on a home inspection and an appraisal, and they come back and say, this home can't go FHA.
Yeah.
So this goes back to experience of your realtor can play a big part in this.
And also in this Washington, D.C. area, there are many condominiums that don't accept an FHA loan. But typically, that's a conversation that I have with the listing agent right up front if I think that that's the type of loan my buyer's going to have. Okay, Andy has a question. What does it mean to buy down an interest rate, Mike?
Oh, no, it's math, and I'm not good at math. The shorter answer is you're paying for a short, well, you could pay a lot of money you could buy a little bit of money with a discount point to buy an interest rate down to get a slightly better interest rate over the life of the loan. And that's usually going to be could be a 1% or 2%. You hear about the 2-1 buy downs, and that's creating a scenario where you will have an interest rate today for maybe 5%. In a year, it'll be 6%, and 2 years after that, it'll be whatever the going rate is, or 7%. It's kind of putting off till tomorrow what you're trying to do today. They're not a bad thing. A lot of sellers in slower markets now are using them to incentivize somebody to come in and buy down a loan. Problems we've had with that in the past is sometimes people's income doesn't go up. So if their income isn't comfortable for them to purchase a house today at a given interest rate, and we don't know what the interest rate will be in 2 years, they might end up in trouble if they can't afford the house in 2 years, and that creates a situation that nobody wants. So nothing wrong with them. You're just buying down the interest rate, sometimes permanently, sometimes temporarily. If you buy it down temporarily, it might come back and bite you if interest rates don't go down where we hope they do. So,
good job.
Speaking of money, how much is it going to cost me to buy a house? So this is varying different parts of the country. I can get away with about 1% or even less on a lot of our purchases here. I think my most recent one was even under 1%. So $700,000 purchase, $5,000 earnest money. You're looking at a home for $300,000 here. You could probably get away with $1,000 or $2,000 earnest money, but different parts of the country. Victoria, for you, for a $400,000 home, what would you put down for earnest money?
Everybody here usually does between 2 and 5 or 6%. That earnest money deposit in a competitive situation, if it's higher, can very often be can let the seller know that you do have cash, and that just keep in mind that earnest money goes into the big pot of your closing costs and your down payment. So it's just the money that you show up front toward the beginning of the transaction. So when you put your offer together, part of that offer will include something to the effect, in our area, we say, the earnest money deposit will be deposited into an escrow account within 3 days of ratification, which is when everyone agrees on the contract. And that money sits there and it comes around to your side at the end of settlement. The one thing to keep in mind about EMD, is that the phrase we call it, is that if you don't show up to the settlement with, the money, your earnest money deposit is at risk, meaning that the seller can go after it. So it is very important that and there are protections in the contract. So if you decide, that you don't want to move ahead due to the inspection and you have an inspection contingency, you get out of the transaction, your earnest money is protected and it's fine. But in the event that, at some point, there's a point of no return in the contract. And if you get there and then all of a sudden you say, hey, I'm putting the brakes on, I'm not showing up at settlement, the seller can go after your EMD.
Have you had somebody not show up at settlement?
Never. It's
Okay,
never.
good. I don't know what I would do there. In the morning, sometimes they have cookies or something there. I guess I'd eat cookies and cry or something.
Yeah, I think so.
But I mostly because I don't like people to lose their earnest money. And I protect their earnest money as passionately as I can. So they, and you talk about 5 or 10% down. Obviously, if somebody's doing an FHA loan at 3.5% down, their earnest money could be pretty much the bulk of their down payment and half of their closing costs in those instances. So you might be writing a pretty big check in DC, but you come to Spokane, I can get you a lot less earnest money. So that earnest money is the thing that's going to be deposited pretty quickly after you have mutual agreement and your home inspection. In our market, $400 to $500, and sometimes that'll include a pest inspection. We don't have many pests here, at least in the real term of pests. I have seen termites maybe twice.
Whoa.
And carpenter ants a couple times. Yeah, no, I know there's other markets where it's just standard operating procedure, but we get such cold winters here that they just don't survive long here if they try to get away with it.
Wow.
Versus years ago, just do a home VA loan. I think it was required for a VA loan all across the country.
Yeah,
So
that's true.
What would a pest inspection cost where you are?
Well, the overall inspection, they usually do it by square footage. So it ranges from what you said, 400 up to $1,500. And that's if it includes, the radon, the pests, if they have a well and septic, that's a whole additional inspection. But yeah, and in the greater Washington, D.C. area, radon can be an issue. Radon is an odorless, colorless gas that is the second leading cause of lung cancer in the United States. So it is a serious problem, but it has a very inexpensive fix. I will say that you can watch one of my podcasts because I get into that about the fix for, radon. But in any event, you want to include a radon test if in fact, you are in an area where they suggest that you do that. I know in Montgomery County, Maryland, sellers are required to provide you with the results of a radon test. So anyway, again, these are all conversations you have with your agent as you're moving through and deciding which inspections you're going to need.
Yeah, and I think a radon test here runs about $100. They just added on to the home inspection. And it's not, when people say, what if it has radon? The answer is you fix it. It's kind of like a car. You get a flat tire, you don't throw the car out, you get a new tire. The radon test, it can be $1,000, $2,000 here, and they put in the pipe system that Vic was talking about. So well and septics, most of the properties I do are residential, and we don't have wells or septics, but we do inspect our sewer lines more often than not here. So not all the time and not half the time, but quite a bit, I guess. So we inspect the sewer line to make sure it's good going from the house out, and just a little ease of mind there. And then, but if I do sell property, residential acreage, we will have the well tested. If your realtor doesn't think the well tested, then you need a new realtor. You want to test it for quality and quantity, and it's expensive. If you're going to buy a home on acreage, it can be more expensive to purchase it. We can talk about having the septic tank pumped and inspected. I think that's running $500-600 more on top of your inspection. The well test can get up to $500 or $600 as well here. So probably even more expensive back east.
But these are also points of negotiation. So just to save on time, you can certainly contact us for more information, but, Ben has a question. His question is, so the earnest money and the down payment can be the same money?
Yes. Yeah. Basically, and you kind of touched on it. Basically, earnest money will be applied to down payment and closing costs. So if you've gone and talked to your lender and they said, here you go, Ben, to buy a house, you're going to need about $22,500, assuming average taxes and everything. That's your down payment and your closing costs. When you write a check for $5,000 towards your earnest money, that means you need $17,500 more dollars to bring to the closing table. Closing costs vary depending on the time of the month you close. So there are variables, but we're not going to get too far into that.
Yeah.
So, okay. Down payment. We kind of talked about that. That just depends on your loan. You might be bringing $15,000 to the closing table. You might be bringing $100,000 to the closing table. So, but you have to have that when you write the offer, because they may ask for proof of funds that you have that. Your lender's going to want to know that you have it. Saying that I might be selling my truck to do it probably isn't going to satisfy a lot of lenders, especially since you probably think your truck's worth more than it is. So,
one thing I'd
go
like,
ahead.
Sorry. If you're getting any gift money, you need to have that conversation with your lender actually before you get to the point where you're writing an offer. But somebody giving you money like mom and dad or helping you buy the house, just make sure that you have a conversation so that your lender knows that money is coming, because typically they'll need a gift letter and some other details that they'll have to take care of to make that happen for you.
Yeah, there's been scenarios where their father is going to be selling some stock and giving them $20,000 to help with the down payment of the house. Well, the lender may need to see that stock sold and sitting in the bank under his name as cash liquid. Because while we all think stock is liquid, there's a lot of stock out there. Sometimes it's liquid one day and it's not worth anything the next. So it's not as liquid as sometimes people think. So if you're going to be getting a gift, everybody needs to know it up front. You can't just show up at closing with $20,000 out of nowhere. They're going to say, whoa, we need to figure out where this came from. Right. And they will allow it, but it has to be documented where it came from. And more often than not, it needs to be somebody you know, not somebody you just met. I think that's the best way of putting it. Peeked at our Q&As.
Okay, we have a question from I didn't get a name, but have you heard of Home for Heroes? They give a 0.7% back of price of house for teachers, first responders, healthcare workers. Is it more expensive and risky in the long term? Do you have to use their lender and appraiser? I have heard of Home for Heroes. I don't know about their program. And Mike, have you heard of them?
We've had similar things here. We've done it for teachers, police officers, firefighters, veterans, of course. That's our state program, though. But as far as the national program, Home for Heroes, I don't know. I don't think you have to use a particular realtors. I would hope not. I think that kind of be a warning sign. I think if there's any program you're ever using where they say you have to use their realtor's probably giving them a kickback, is my guess, or helping fund the money that you're getting. So I'm not saying it's a bad program. I just not familiar with it.
Oh, the person just said they say you have to use their realtors. So it is possible, in fact, it's very likely that they are offering the realtors kicking in some of their pay, their commission to subsidize this program. But I don't know about Home for Heroes. I have seen it. I think the best thing you can do is talk to a recommended lender. If you have a realtor that you're working with, ask them, to get the number of a lender and then run this by them, and they'll be able to give you that information. Andy wants to know how long does it typically take to close when you get a firm contract in the Washington, D.C. area. If it's competitive and they want to close fast, we could do 3 weeks. But typically it's about 4 weeks from contract ratification until settlement date.
And here in Spokane, we take 5 to 6. Mostly a lot of times sellers aren't ready to move. And here, maybe we move a little bit slower than Washington, D.C., or definitely we do. But yeah, if you have a seller living in a home with all of their belongings, and sometimes their kids aren't out of school yet, and they've got to make plans to move out. Most people aren't ready to move out in 2, 3, or 4 weeks here, I don't think, unless sometimes the house is empty. That makes it simple and quick, and that depends. 2, 3 years ago, you couldn't get an appraiser in there for 5 or 6 weeks. So we had a lot of delayed closings. Today, the appraisers aren't as busy as they used to be. So, okay, appraisal. We talked about that. Closing costs. 3% used to be the standard number. It seems to me they're a little bit higher now. Part of that is homeowners insurance has gone up, so it's not as little percentage of the purchase price as it used to be. Property taxes have probably gone up a little bit, so when those are being prorated at closing. So I think that, and when I talk about closing costs, I'm talking about all of the money you need to bring to the closing table. Usually it includes a year's worth of insurance premiums. Depending on where your taxes are, you might have to pay property taxes for the coming months included in that. So it can get up to 5%. I like to see it at 3%, but it also depends on the time of the month you close because of prorations. So you want to talk about property surveys, Victoria?
Just briefly, it's a good idea to have a property survey if you're buying, just in general. I will say that in Washington, D.C., it's not common to have the property survey because these homes, many of them are several hundred years old, or at least the neighborhoods are. And so the properties are, sometimes they'll be off a little bit. But I would say that, again, you want to have a good discussion with, it's usually the title person who orders it, and here in the Washington area, talk about, it's good to know the boundaries of your property. And if even if it's fenced, I recommend that you get a property survey. And at the very least, there's something called a location drawing, and that shows you the location of the property, of the house on the property. That can give you some insight as well. But that's my 2 cents on property surveys.
What would you pay for a survey back there?
They can be really expensive depending on how much land. Again, they can range anywhere from $600 to, $1,800, $1,900.
Okay, that's probably why we don't do surveys here.
Yeah.
I mean, there's certainly rare occasions, but a survey is going to start at by $1,200-$1,500 here, and we just go. Most of the properties I sell have a fence, pretty delineated backyard. Absent a dispute, I don't think people would spend the money on a survey here.
Okay.
More often than not, they go and try to get along with their neighbors, and they could all mutually agree where the fence is. It's when neighbors don't get along that you need a survey here.
Mhm.
So it's cheaper to get along with your neighbors. Go ahead, Nick.
Okay, choosing your buyer's agent. We like to keep it simple. If you have the opportunity, we recommend that you choose an exclusive buyer's agent. Exclusive buyer agents are real estate agents and brokers who have made the decision to only represent buyers in every real estate transaction. Listing agents and listing brokerages, they represent the seller. So remember, when you, excuse me, go to an open house and you're talking to someone there, that person has the best interest of the person selling the property. So you don't want to be sharing a lot of your personal information. And you also don't want to go to that person if you're going to be interested in making an offer on the property. Because again, excuse me, they have a fiduciary duty to that seller to represent them at the highest level. Dual agency, it is illegal in many states because of the conflict of interest when a single agent represents a buyer and a seller in a single transaction. If you agree to a dual agency situation, you are signing a dual agency agreement. And in that agreement, it sometimes doesn't specify, but you need to understand that you are giving up your right to exclusive buyer representation as a home buyer. So it's really important that you understand representation. And as I said, choose an exclusive buyer agent if at all possible.
I do have,
go ahead.
Oh, just a question about, that sounds great, exclusive buyer agent. How do I know if I found one? Because I see a lot of things that just represent real estate agents, and they talk about that. And
Yeah.
then what if I can't find one in my area?
Boy, that's a really good question. Mike, I want to hear what you have to say, but I wanted to answer it real quickly. You have found an exclusive buyer's agent when they have no listings to sell you. Exclusive buyer agents represent home buyers. They don't represent properties. So you're not going to see our faces on signs in front of somebody's house. We're not going to be, the neighborhood expert on listings because we have no listings. And the reason that we've made this decision is because we feel very strongly that a home buyer deserves full representation. I mean, you're the one who's bringing all the money to finance the transaction. You need an advocate. You need somebody who's going to look out for your best interests. And we're passionate about it. We are so consumer oriented. It's one of the things I love about going to NAEBA conferences because it's this group of people who think just the way I do, which is we're looking out for somebody, and we want to protect your interests fully. So to verify, they will typically, if you're an exclusive buyer's agent, you'll see somewhere on their website that they have NAEBA, the NAEBA logo, and the quick, easy way is to just make sure that they don't have any listings. And you can also call us. We'll verify that for you as well.
Yeah. And I always like to remind people as we talk about them, there's lots of great realtors out there, and you might end up in a market where you don't get an exclusive buyer's agent. And that's too bad, but we can't find one for everybody, but we do try. You can ask your client you could ask a realtor what percentage of your clients are buyers or sellers, so you could feel that out. They might say 80% of my business is listings. A lot of realtors do 100% listings, but if they have a good buyer coming along, they won't turn it down. But their loyalty is probably to their sellers, not to their buyers. So it's probably 75% of the markets out there don't have access to an exclusive buyer's agent. I don't know the numbers, but it's not a lot of them out there. It's kind of a specialty that we choose to do kind of to protect buyers if we can. So like Victoria said, you could reach out to National Association of Exclusive Buyers Agent. If they don't have one in your area, they do their darndest to find somebody that is at least what's called an accredited buyer's representative, or at least somebody that will at least promise to represent you and you alone and not take on dual agency responsibilities. You never know you're in a dual agency situation until you're in one. You basically have walked into a house, you love the house, turns out the nearest realtor is the one that has it listed, and you're afraid to go find your own realtor, so you settle for the dual agency. It can go well. Real estate can go well sometimes, but it's more often complicated. The more complicated it gets, the better off you are having your own broker.
That's a good point. One quick question to answer. Do you need to sign a form document with a realtor before you look at places? I think it depends on where you live. But Mike, you wanna answer that for where you are?
Well, yeah, and you're right. It does depend where you are. We have a new law here in the state of Washington that prior to taking on a real estate buyer as a client, we are required to have a buyer's agency agreement signed with them. Now, the definition is as first real estate services. So if you were to call me up and say, I want to go look at a house, I'm not going to make you come into my office and sign a buyer's agency agreement. I'm going to go meet you at the house, introduce myself, ask any questions, answer any questions. If you decide that you want me to continue to show you houses, by law, I need to get a buyer's agency agreement with you. But it's basically as soon as I start providing real estate services. But other markets, it's going to be different. There are some markets where they might say that you have to sign a buyer's agency agreement and you don't. So be wary of that. But it shouldn't be hard to look up the laws in your states and read the agreement carefully. I just encourage you to do that. There's going to be a clause on there asking for permission to do dual agency. You don't have to consent to that.
So one thing I will add, I work in Maryland, and I require people to have a buyer broker agreement when I go out. But what I do to kind of take the sting out is I say we can sign one for the weekend. And as long as you come to an agreement with the agent that you're working with. So remember, you're going to have a beginning date and an end date on a buyer broker agreement. And I have done that, just for a weekend. And then of course we end up extending it because we're going to start looking for houses. And Ben makes an excellent point. Thank you, Ben. He says in July, nationwide, buyer broker agreements are going to be required. So that is something that that you'll need to keep in mind. But again, the person who's asking is asking about New York and Long Island. Most importantly, what you want to do is take a look at if you're asked to sign a buyer broker agreement, take a look at the duration of that time period and make sure you're comfortable with it. We have an associate in Long Island, and she may add her 2 cents in here so I can answer your question directly as to whether or not you do, in fact, need a buyer broker agreement.
Yeah, and if somebody insists on a buyer brokerage agreement and they insist on you signing one then and there without them having built your trust, and they say I need a 30-day, 60-day, 90-day, offer to do it 48 hours, offer to do 72 hours. And if there's a broker out there not willing to sign a 24, 48, 72-hour brokerage agreement with you just to prove their worth, I think you need to find another realtor.
That is a really good point. That's a good point. The whole point of all of this is for you to feel comfortable. If at any time you're not comfortable with the person that you're working with, don't ignore that radar that goes up and tells you something doesn't feel quite right. Don't sign anything unless you're comfortable, and that's really pretty much how I'd feel about the buyer broker agreement.
Yeah, it's most relationships, whether it be real estate or otherwise, if they start off bad, they don't get better. So sometimes they can start off good and get worse, but if they start off bad, they seldom get better. I hate to say that about it, but
yeah. And Lora makes a point that, the word fiduciary, although not familiar to a lot of people, is a legal term that means you are legally required to look out for the best interest of the person who has retained you for that service. Not everybody is going to be a fiduciary, because they could have conflicts of interest. So it's an important distinction.
And she also adds, to answer your question, the person in Long Island, and Lora Cusumano is in Long Island, so keep her in mind. Currently, you don't need a buyer agency agreement in New York. However, you do need to sign the New NYS agency disclosure form on first substantive contact. So very good. Thank you, Lora Cusumano in Long Island, for that answer.
And as Ben mentioned, that's going to change if all goes as expected by middle of July this year. Nationwide, everybody will be required to. All right, so what do you want or need in a house? That's the exciting part. I frequently meet with clients if it's not at an office, it's at a coffee shop, and they've got their list in front of them and they want to tell me what they want in a house. And I say, I pretend like I've got this magic gift, and I say, let me guess. You want 3 to 4 bedrooms, 2 or 3 bathrooms, you want a fenced backyard, you don't want to be on a busy street, you want to be able to walk to a park. And they're like, how did you know that? So there's all certain things that we want in a house. And then there's certain things about needs. And I've learned over the years that some people don't know what they need until they're looking at houses. And then sometimes they don't even know what they want until they're looking at houses. And in our market, I can kind of narrow it down and say, if this is your price range, this is what you get. And if somebody came to me to Spokane and says, we want a house in a nice neighborhood with 3 bedrooms and 2 bathrooms for $250,000, that doesn't need any repairs, I'm going to say, not Spokane, Washington. Spokane somewhere else maybe, but not Spokane, Washington. So, but that's our job. Our job is to listen to your needs, what your wants are. You get to prioritize. You will change your wants and needs as you go through it also. You all of a sudden say, maybe we don't need the backyard fence, we can put in a fence ourselves. If somebody comes to me and says, we just want gas furnace, I say, that's great, but I'm not going to search based upon a gas furnace, because a furnace can be changed.
Yeah.
If somebody says they want a fixer-upper, I can find them that. If they say they don't want any fixer-uppers, that's a relative term. So sometimes I have to take them into a house, and I've had people say they want to do a fixer-upper, and you take them into the house and they says, oh my gosh, we could never live with that carpet. And I'm like, really? It's like, if that's your level of you can't fix up a home, we're not looking for fixer-uppers.
Yeah.
And I've heard the same for paint. I've seen people turn down houses, especially when they're first starting off, and they walk in, it's like, I could never live in this home. Look at the colors on the wall. It's like, yes, but it's your wall. You get to change the colors of the wall. And slowly they realize that this will be my house eventually.
Yeah.
Fixing up's not for everybody. I'm not very handy myself. Contractors are hard to find these days. So that's one of the things when we talk about wants and needs. Some people do want a fixer-upper, but sometimes they think they're going to get this fantastic price for it.
Mhm.
And that's not always the case. Sometimes there's somebody flipping houses that's going to pay more for that house than you're willing to, because most buyers overestimate what it's going to take to repair a house. They just think, they see a furnace and they think $10,000. They see a roof, they think $25,000. They see carpet and they think $10,000. And that's about double what a lot of those things could cost. But sometimes it intimidates them. But that's your realtor's experience again. Your realtor will help you find resources, somebody to call. They can call a past client that recently did carpet throughout their house and say, what did you guys have to pay to do carpet throughout your whole house? So they're a resource.
Yeah.
So,
And I encourage you to have these conversations if you're buying with a partner, talk to each other about this. You'd be surprised how often there isn't coordination until you're in the house, and then suddenly, this conversation comes up. So the wants and needs for both people should be relatively the same, so that we can get off to a good start when we're looking for houses.
I am happy to sell you 2 houses if you can't come to agreement.
Right.
So I'm willing to share that.
Mm-hmm.
Okay, checking, no questions up there. Go ahead, Vic.
All right, determining the value of a house. So ultimately, you are going to be the one who decides what a home is worth. And I know that sounds like it might be daunting at this moment, but our job is to provide you with information. And we do that by providing you with comparative market analysis. We look at properties that have sold in the neighborhood, like the one you want to buy, in the last 6 months. We evaluate their condition. We talk about it with you. Sometimes we're either in person or we'll do a Zoom call and go through the recent closed homes, and just so you have an idea of what this price is that the seller wants. Sometimes it's priced high, which means that it doesn't seem to be in the right range as the comps show, and comps is short for the comparable properties. Or sometimes it's low, and sometimes when it is lower, you'll have many offers coming in because people think that it's at a real good deal, and sometimes it's priced just right, kind of like Goldilocks, right? But the most important point is that you decide what it is that you want to offer for this property, and you do this with the help of your buyer's agent. Then, after you've put in your offer and your offer gets accepted and you have a ratified contract, at that point, your lender is going to order an appraisal and an appraiser to go to the property and provide an appraisal or appraised value of the home. That independent appraiser goes out. It doesn't talk to your buyer's agent, doesn't talk to you, and typically they will sometimes talk to the listing agent to get into the property. But the point is, they go out and they evaluate what the home is worth, because that is whatever number they come up with is the amount of money that they're going to lend you on the property. That's going to be your loan amount. And in the contract, which we're going to cover here in a second, if you have an appraisal contingency, and the appraiser goes out and says, oh, I think the house is worth 500,000, but you've paid 525, or you've put that in your sales contract, that is a point where you will negotiate and you'll ask the seller to lower their price to the appraised value. And so we'll talk about that in a minute when it comes to contingencies, but all of that is how you determine the value of a house. Mike, anything you want to add?
Yeah, there's no promises that the seller will reduce it to that appraised value. They may be a little upset. They may feel that their realtor didn't do their job, which could obviously be the case. You should be prepared for them to say no, and you should be prepared to compromise with them, perhaps. Keeping in mind that your educated guess when you wrote the offer on the house was 525, you made that decision based upon other homes you looked at, and your realtor helped you come to that. The appraiser can be wrong. So it's a bonus that you're probably going to get it less for 525. Don't count on the bonus that you're going to get it for 500. More often than not, I need to see a compromise in there to get the seller. The seller wants a bone back too.
Yeah.
So, and I'll caution you sometimes you will be concerned about paying a price for a house. And I've heard this from realtors all the time. They proudly say, I explain to my clients that if you offer too much for the house, the appraiser will come in and correct it. That's not the appraiser's job. You need to be comfortable with your price for the house. We're talking about you being the most educated person for that house on a given day because you're the one writing the offer on it. To a certain degree, I think you're more prepared than the lender to determine what it's worth. He hasn't been looking at the same 12 houses in the neighborhood that you've looked at. He might have driven by them. He might look at them on the internet, but he has not walked in them. He doesn't know why you came to the conclusion that that house was worth 525 and he came to the conclusion for 500. So there's lots of variables in appraisal. They think it's a science. It's not. It has a lot to do with math, but it has a lot to do with perception too. So keep that in mind. And at the bottom of the slide here, I don't think you can see it, so Victoria can't read it, but I remember what it says. So the appraiser is sent to the home by the lender to confirm or verify that in the event the house is taken back by the lender, they want to know that they can sell it again for the same price. So the appraiser's not buying your home. So his concern of value is not as much as my concern is about your value as my client. So nothing wrong paying a little bit more than the appraiser thinks the house is worth. Ideally, I've had sometimes when the appraiser comes back and appraises at $15,000 higher. The sellers aren't going to be allowed to come back and ask us for the $15,000 if they find out about the appraised amount, and they do sometimes. So that's just a bonus to my buyer. It's like, wow, we did really good there. We got the house for less than even what the appraiser does. Doesn't mean it's worth $15,000 more. Just means the appraiser thought it was worth $15,000 more.
And
So-
Mike, you made a good point, and Victor has a question to follow up on that point. And Victor's question is, would you get your earnest money deposit back with no problem if the seller doesn't want to come down to the appraised value? In that scenario, you're going to have negotiation. And if you don't come to an agreement in the contract, in the sales contract, in the language about the appraisal, there is the opportunity to get out of the sales contract if you can't come to an agreement on the appraisal. So yes, you would get your earnest money back because you have followed all the rules that are set in place in your contract. The only time that you wouldn't get it back is if you, well, there's other scenarios. We won't get into that at this point.
No, they're not.
Too involved. But
you
yeah.
will be given an opportunity to give up more money if you want to, if the appraisal comes in lower and you agree to pay above and beyond that. But that's in a multiple offer situation. That's for your realtor to explain to you.
Yeah.
It could be an hour class in itself. How they're called in our market, they're called additional down payment scenarios, and we're not going to get into that.
Yeah.
So check questions here. Did we get that? It's gone.
Yes.
Okay. Basic components of an offer. I think the people listening here pretty have this down by now, but
yeah, for sure.
We talked about the sales price, which is the price that you and the seller eventually or mutually come to. The settlement date, in some markets, it can be as quick as 25, 30 days. In ours, maybe cash, we could do it that quickly, but 35 to 45. Earnest money deposit could be as little as 1% or even less in some markets. And you go back east in some of the bigger markets, it seems like it's pretty high, 5 to 10%. And there's nothing wrong with the higher earnest money deposit. As Vic mentioned, sometimes it takes a little sway with the seller. The probability of a seller getting the earnest money, absent you just deciding after the appraisal, after the inspection, and you're already up to closing, and you still have your job, and you just decide you don't want to buy the home, almost all of those things have to happen for the seller to get your earnest money. You're good with the inspection, appraisal came in at value, you're fully employed, and you have no excuses. I've had less than 3, but I think only 1 or 2 people lose their earnest money. We're going to protect that for you. If you don't want us to protect it for you, we'll tell you what to do. But there are things that could happen. So the lender letter, you're going to get that. That'll be part of your offer. 30 years ago, we didn't have lender letters. We just say, oh, yeah, they're pre-approved with so-and-so. They'd call up the lender, and the lender would say, what was his name? Yeah, sounds good. He can purchase the home, no problem. And then 2 weeks later, you find out that they never even ran a credit score yet, and the people aren't ready to buy a house. The home inspection contingency, hopefully you will have one. Multiple offer situation, and if you are in a really hectic market, and I don't know where they are in the country right now, I don't know any that are as bad as they were a few years ago. If you're in a really hectic market, your realtor is going to say, well, we could just waive the home inspection contingency. I've been asked that. I've never suggested it. And I leave it entirely up to my clients. I think it's a really bad idea. But I can't say that there aren't times that my clients made that decision and they bought the home and that was the only way they were going to get it. It was never my idea, and I tell them it's a bad idea. That way I never get that phone call 2 months later and ask why I didn't tell them about the mold in the attic. So I put myself on
So
the record.
So I will add though that I do recommend in multiple offer situations the pre-contract home inspection, and this is done just like it's described. It's a home inspection done before you put the offer in. So you want to be really committed and ready. You know, I love this house. I want this house, because it's going to cost you money out of pocket. The pre-contract home inspection is a limited version of the bigger home inspection, but it gets it done. You walk through with the home inspector and you get the thumbs up or the thumbs down. Sometimes they'll send you photos, but you have a really good conversation about everything in the home. Hopefully you get an inspector who can't help himself and they're just testing everything along the way. Those are the guys that I work with because I love it. You know, I have a guy who can't help himself. He's put the tester in all the outlets, and I just love it. So in any event, that is an option in a competitive situation, but it's not one that you want to use all the time because it costs you money.
Yeah, and for a period of time in Seattle, where people were waiting on the street corners to look at houses, they would do an inspection before they put the home on the market, and all the buyers were obligated, this is the only inspection you get. And they provided the inspection prior to them writing an offer on the house. So they weren't taking any inspection contingencies. So there's some crazy scenarios out there.
And Stephen has just asked a question. In my market, offers have typically been due 48 hours after the earliest open house. Is a pre-offer inspection practical in these cases? Here's what I say to that. When you're working with a really good agent, a really good buyer's agent, the minute the house comes on the market, you want to be in there. Because yes, they will have open houses, but typically they don't have them the first day the house goes on the market. They'll have them a day or two later. In that amount of time, you've got time to get in there, make a decision as to what you want to do. And at that point, you have a conversation with your agent, have them call the listing agent, say, hey, can we do a quick pre-contract home inspection? And you know, so no, you don't want to wait till the open house is my advice.
Yeah, and not all sellers are going to allow a pre-inspection either, though. Like in our state, one, you definitely need permission from a seller to have an inspection done. And I don't know if they'd always say yes. So you have to be prepared for that. So let's see, anything else? Home inspection contingency. And so ours is yay or nay. You can do a home inspection in our market. And if you just decided you don't want to buy the house because the cupboards were yellow, that is the time to walk away. You don't have to tell the seller why. You don't have to give them an opportunity to repair anything, which used to be the case 30 years ago. But I don't know about yours, Victoria. Can you just walk away, or do you guys have to give them some sort of a reason, or do you have to give them an opportunity to remedy anything?
Well, we have 4 different contracts in this area, and
Yes.
yeah, so the right to negotiate and the right to cancel, you can have both of those boxes checked, or you can just do one. So we have the right to cancel, you can just walk and you don't have to tell them. But if you have the right to negotiate and the right to cancel, then you've got to negotiate. And that would be awkward if you just wanted to walk because the cabinets were yellow. But
yes, but they don't. We never have to say why here. So
yeah,
you're pretty well protected. So remember that inspection contingency. I know Vic tries to get hers done in 3 or 4 days. We can take up to 6 or 7, or it can take that long here sometimes. And then your financing contingency. If it's done properly, there are clauses where your financing contingency could be removed within some contracts. But ours is fairly solid, at least for the first 30 days. So as long as you have a job, the home appraises, you'll be expected to go through with the purchase and sell agreement. Within that 30 days, if you lose your job and are no longer qualified to get the loan, you will get your earnest money back in our market. So keep your job, make sure the home appraises, and don't go spend your money that you need for the house. And don't go borrow any more money. We didn't talk about that.
yeah.
Don't go buy the washer and dryer on a contract. Don't
Yeah.
go buy a new truck on a contract until you close on the house and have the keys and you know it's yours. Because that could detrimentally affect your purchasing power. So anything else there, Vic?
No, that's good.
Question on this is, how many days typically are we looking at that will it take to close once we get our offer accepted?
In my area, it can be 3 weeks to 4 weeks. And Mike, I think you said what, 5 to 6 weeks?
No, Yeah, close to 6 weeks, at least 5.
Mhm.
Okay.
So,
All right. Thank you.
Okay, I'm going to start speeding it up because I don't want to eat up too much of your time. Making an offer. 90% of the time, except for our associates that we know in New York City, it's the real estate agent or broker who's going to put your contract together. And when we say we're going to put it together, we're not lawyers. We fill in blanks on a contract that has been written by real estate lawyers. The offer price determined by the buyer after you carefully consider the comps and location and competing offers. And then when the buyer and the seller agree on the terms of the contract and everyone has signed off on the contract, it is a ratified contract. And I'll back up. Everything that I do is done electronically. So I load it in for electronic signature. I send it to my buyers to sign. They sign, sends it back to me, and then I send it to the listing agent with the lender letter. And that is how offers are done. Some areas may still do it by hand. I don't know. But Mike, anything you want to add?
we are very much all electronic here. And we'll caution you, if you send off an offer to somebody and they sign it, it's a mutually agreed transaction. You might just hear back that they've agreed to it. If they send you back a counter offer and you're saying, you know what, we were willing to pay 320, they're at 320, but maybe we should try 318. If you change it to 318 and send it back to them, it's an open contract and all of a sudden they get a better offer. And this can happen oftentimes. Do not overthink it. If you're willing to pay something, I hate to see a client lose a house, but once you have it mutually signed around, I tell my clients, this is not a done deal, but we are in the driver's seat. You know, once we have it signed around, we're in the driver's seat. We are the ones, based upon the inspection, the appraisal, and qualifying for the loan, that we are the only ones that can terminate this contract at this point in time. So just be careful. Don't over negotiate your house, because in a busy market, they might have another offer come in. The realtor gets a call and says, yep, we've got an offer. We sent it back to them. We've countered it. And the realtor might say, I'll have one to you right away. And the realtor says, well, get me close to full price and it'll be better than the other one. So you can lose a house quickly. So when you get a counter offer, you can sleep on it if you want. But there used to be a saying when the market was busy, if you sleep on it, you'll never sleep in it. So be very cautious about countering. And the sooner you have it mutually agreed by both parties, then you can relax and talk about the house and make plans. But until then, until it's ratified, it's an open contract and things can move quickly. So somebody can take it out from under you.
That's right.
All right. Do I have to talk fast? I can do this faster than this page looks. It doesn't look as long as it is. Mostly because we've talked about all of it.
Right.
So once you get the offer signed around, that earnest money needs to be deposited into a bank. That'll probably be, or not the bank, probably the closing office or the title company. In a lot of markets, they use attorneys to close real estate transactions. Most of ours are done here by what are called limited practicing officers. So the earnest money could be a cashier's check. Ours will accept a personal check. We're going to talk maybe a little bit about wiring instructions. We'll use caution. Go ahead.
Ours are typically wired. I just want to add in here that wire fraud is a real problem, and your agent should be very aware of it and should be warning you about it. But the most important thing to know is, I just read this today, that technology is moving ahead, and the scammers are always one step ahead of us, trying to see how they can intercept everything when the transaction is happening and when you're wiring funds. So today I was reading that AI has they can replicate the voice of your agent. And they can call using this replicated voice of your agent, leave a message and say, hey, the account number's changed. This is where you should send your funds to. And apparently people have believed it and wired their funds to this scammer, and they've lost their earnest money. So the most important thing is that you're in communication with the title company. We use title attorneys here, and they always call our clients, make sure that they're on the phone when they're wiring the funds. And your agent is not going to be involved. So there's never going to be a point in time where they're going to say, hey, I got this email and you need to send your money. You know, just anything wonky, you want to reach out to that title company and say, did you just send me an email? Which, by the way, they won't. They'll only send you secure emails. So just not to scare everybody, this is another reason why you want to work with real professionals, because this is a lot of money and you don't want to lose it.
Yep. Wire fraud is big, so be cautious with it.
Mhm.
So you will need to get that earnest money to the title company one way or another, but do it in conjunction with your realtor. And they don't change. The biggest clue is the most common wire fraud that comes to your email says, we've changed our wiring instructions. Please follow the instructions below. They do not change wiring instructions. No ifs, ands, or buts. So number two, you're going to have to make sure you're all pre-approved. So the only thing you need to call up your lender and says, what else do you need from me? And they're going to say, well, we haven't done this for a couple of weeks. We'll need your next mortgage statement, your next paycheck stub, and your next bank statement, and we'll be good to go. And then they may need a deposit for the appraisal. You're gonna have to reach out for your homeowner's insurance. You'll be responsible for securing that probably sooner than later. Probably the first person to start with is the person that does your automobile insurance. So contact your automobile people then, whether it be Safeco, Pemco, Farmers Insurance. Sometimes they may not insure the particular home. It might be an older home. It might be in a fire zone. Different insurance companies have different standards as to where they like to insure their homes. So it's worth shopping around. And eventually most people, whoever they end up insuring their home with, probably the next cycle they re-up and they put their car insurance on it, because you usually get about a 10% discount if you do them together. And the insurance company is going to have questions. They're going to ask you, well, what's the square footage? Where's the nearest fire hydrant? When was the roof last replaced? Those are all questions you can reach out to your realtor to find out. And you can even ask them to call your realtor. Your realtor should be willing to cooperate with the insurance agent. And then you start resolving those contingencies. You get your inspection. The lender's going to get the appraisal ordered. Ideally, the appraisal is not ordered until after the inspection, because you're doing the inspection, you're spending $400, $500, $600 to have the house inspected. If it does not go well in the inspection and the appraiser's there at the same time, you're paying for that appraiser when otherwise you might have canceled the appraiser if the inspection didn't come back well. If you're buying a really good, solid home and your realtor confirms, like, I don't foresee any big deals here, I think you can go ahead and get the appraisal ordered so we're not falling behind. Take your realtor at his word, and if he's wrong, take his money. So let him pay for the appraisal if he's wrong. We call that an education fund. So not putting you on the link there, I hope, Victoria.
No. But one thing I do want to add, though, number three, I won't get too much into flood insurance, but one of the things that you want to be checking when you're buying a home is whether or not it's in a flood zone. You will be required to have flood insurance if it's in AE or any of the other flood designated zones. There's a really great podcast. In fact, I did two with Jeff Jackson. He is the director of insurance for FEMA. So if you want to learn more about that, you're definitely invited to tune into that podcast. But again, check and make sure you're not in a flood zone as you're purchasing your home.
Yeah, and there might be some telltale signs, but sometimes there aren't, especially if you're not familiar with the area. So that might help. Your realtor is not going to be responsible for having that knowledge, but an experienced realtor might have that knowledge. So.
The home inspection. We could talk quite a bit about this, but the quick version of this is that we highly recommend a highly qualified inspector. I know Mike probably has a handful of people he recommends. I do in the Washington area. I like my inspectors because the other day I was with one of them, and as I said to my buyer, well, we have to appreciate Yuri because he has no filter. He just says everything that he sees and he feels. I love it because he doesn't sugarcoat anything. That's what you're looking for. That inspector is going to tell you what's right with a property, where the main water turnoff is, all the things you need to know. It's like they'll create like a house Bible for you, but they're most importantly going to tell you what's wrong. And then they're going to deliver a report, and you'll go through that report with pictures with your agent, and you'll comb through it and you'll decide, do I want a credit? Do I want the seller to fix it? Now, this all happens if you have a home inspection contingency that includes negotiation, which, I do recommend. Then you compile that information, put it onto an addendum, and it's like that game of hot potato. You toss it back to the listing agent and say, okay, here are our terms. We want you to meet them. And then the negotiation begins. Sometimes they say, sure, that's great. Sometimes they say no. And, as you can imagine, this can go on for a bit. If you don't come to an agreement, we get you out of the transaction.
Yeah, and I caution against the laundry lists. A lot of times people will see something minor on a home inspection. It could be a leak, like the bathtub might just have a small leak coming out of the faucet. There are sellers have a breaking point, and the closer you get to the breaking point, sometimes you might get some of the things you want. You might pay for it when you move into the house and it's not left in otherwise condition. They might be saying, oh my gosh, we took their offer. We had 4 offers on the house. We took their offer. And then they came back with $1,800 worth of small repair requests and nickel and dimed us to death. Then they're going to save their $500 on the house cleaner they were going to have come through there. So be careful what you ask for. If you come across something that if you'd have known otherwise about the house, you would have never written the offer, that's certainly a deal breaker. That would be mold in the attic, an electrical panel that's been repaired, a furnace that's not working, a hot water tank that's leaking, or a dishwasher that doesn't work. Those are the things you should be focusing on. I also focus on minor safety items, anything that could cause a fire or water that could cause damage. But common things that we don't talk about is if there's not grounded outlets in the basement bathroom. If that's the only electrical problem in the house, well, my clients can deal with that when they move in. If there's electrical problems all over the house, well, then we'll put the list together and we'll ask for them. But be careful what you ask for. Our paperwork really allows us to go back once between our client and our seller. It's basically a request, and they come back and they say yes or no. If they come back and they give us a counter offer, we start on a whole new form of the transaction is dead. So
Interesting.
we're pretty quick here to get through it.
Yeah, ours is not like that. This could go on for a bit, but
yeah. So anyway, don't talk yourself out of the home. I'd hate to see somebody do that. I've seen people walk away from homes over $300-400 items, and you're just going to go spend $500-600 on the next inspection. And the only problem I've had people, bad inspection, or not even a horrible inspection, but they don't get everything they want. They go write an offer on the next home and they say, we don't want to do a home inspection because we didn't get everything we wanted last time. It wasn't worth the money. And it's like, no, we need to do the home inspection. It's not to try to get things from the seller. It's to make sure that you're comfortable buying the house. And if you're not comfortable buying the house, give the seller the opportunity to remedy it.
Right.
Okay. Final steps. Oh, this might be me, huh?
That's you.
And once again, I think we've got a lot of redundancy in here. Provide the various documents to your lender. We've talked about that. Respond as quickly as possible in the process. Your delays could hold up closing. Lenders have time frames, and when they send something to your employer to verify a confirmation that you're employed there and will continue to be employed there, maybe with things electronic, things are better these days, but it used to be the fact that it would come in the mail and it could sit on a desk for days because they get a letter from somebody they don't recognize, it's not part of their business, and they don't open it. And all of a sudden your lender says, we've tried to get verification from your employer for 2 weeks. That'd be the case of having a bad lender 2,000 miles away that doesn't follow up, or having a lender down the street that calls you up and says, I sent that to your boss. Could you please call your boss and tell him we need verification? So everything do as quickly as possible so that you're not responsible for the delays. They do review the property to make sure that the person that's selling you the property, it's their property. They may have loans against the property. They make sure they're paid off. That's kind of the process. That's why real estate transactions don't close in a week. It takes time to verify that the person selling the property is the right person and there's no debt against it that can't be paid off. It's possible that a seller owes more on the home than what they're selling it for, but they plan to write a check. Well, somebody needs to verify that they're going to be ready to write a check to sell their house to you. And the big one is for the last, 15, 16 years, 3 days prior to you going in and signing the paperwork to own that home, you're going to what's called a CD. Some people call it a closing disclosure. I think I call it a consumer disclosure. It is verifying that all the charges that you were promised are the only ones you will be paying to close on the loan. And they require you to sign that. So when you get it in your email, they'll send it to you by email. You can sign it electronically. You can be at the soccer game watching the game and pull up your phone and you can sign it. sign it as fast as you can. If you wait till the next day, you may delay closing by a day, and there's no latitude for that.
That's
So
right.
your lender should call you up and say, I'm sending you the disclosure. Don't say, I'll take a look at it when I get a chance. Say, I'll take a look at it right away. I will initial it. I'll call my husband and make sure he initials it, and we will have it done quickly. So that's an important one.
That is very good.
And go ahead, Vic.
Settlement day. This is the happy day, the day you get the keys, the day you own the property. And it's usually a very happy day. And I say usually because you want to make sure that everything is in the house that you expect to be in the house, the washer, the dryer, the refrigerator. And so all those things should be there. If they're not there, that's an issue, and you would contact the settlement attorney and they would hold some funds, and that's a whole nother story. But let's just stick with the happy story, which is settlement day. You do the final walkthrough. You make sure everything is functioning properly. You leave the house, and then you head to settlement, and it typically takes about an hour to sign all the paperwork. And after that point, you get the keys. Sometimes sellers and buyers are in the same room. Sometimes they're not, depending on if they've already moved out. The sellers may not be there. But this is when it's a good opportunity to find out a lot of the details about the neighborhood. And that's basically the day that you will own the property, and then you can start moving in. So I guess congratulations when you get to that point.
Yeah, things are a little different here, because I kind of let Vic know. I warn people that the house may not look as good while the sellers are 4 hours from moving out of the house as it did when you walk through the house. If you've ever moved out of a house or even moved out of a rental, that last 3 or 4 hours before you're out, the house looks pretty rough. Furniture's been moved, there's boxes, there's no pictures on the walls, all the little faults are shown. So brace yourself is what I tell you. And I prepare my clients for that. Some homeowners are great. I like to think, actually, I don't think, I know 90% of the homes that I have people move into, the homeowners have made at least a decent effort to leave the house clean and behind.
Yeah.
That's the nice thing about the walkthrough. You can be prepared for that. And if, as Vic talks about, you also have to be prepared. Let's say the garage still has some tires in it, has a transmission sitting on the floor, and you have a really tough decision to make because maybe your moving van's parked outside. So your realtor has two options. It calls up the seller and says, we are not going to sign the paperwork until the transmission's out of the garage. And the seller may say, we've left town. We don't know, we're not going to do it. Do you close on it or do you wait? Now, if you wait, they will eventually do it, but you may be waiting 1, 2, or 3 days.
Well,
So,
we have them hold money in escrow, and we call somebody immediately if there's any issues like that, and we get that stuff out.
yeah, and I don't think we'd have that in our contracts. We don't have the right to do that. So it has to be negotiated then. And I'm not saying the seller couldn't turn around and say, I'll leave you $500, but to force them to do it, it's really tough. Absent their permission to hold money in escrow, we can't ask them to hold money in escrow here. So anyway, so you're walking through, make sure the house is in good shape, like she said. Yes, we've walked in houses and the refrigerator's not there, the washer dryer's not there. I'm more concerned about damage to the property. Sometimes they haven't watered the lawn for 2 weeks. They've moved and it's the middle of summer, and not much you can do about that either. That's just unfortunate. You turn the water on, get it going. So I think that's it. That's not as positive as Vic like to leave it on, but it is an important aspect of the house. And if your realtor doesn't make sure you do a walkthrough, you need to make sure your realtor's responsible for what's wrong with the house when they move in. That's my book. So,
I think we have one more slide, our final slide. I think so. There we go. Again, we are the National Association of Exclusive Buyer Agents. It's NAEBA. We are here to answer any questions that you have. We want your experience to be a wonderful one, a happy one, successful. That's why we do what we do. And we are so grateful that you joined us for this home buying class. Thank you so much. We really appreciate it.
Yep. And if you guys got any questions, you're still welcome to throw them into the chat box. We don't need to be anywhere.
Yeah.